It is escalating. I mean, and you can see even our allies, last time we had talked a lot about BRICS. Subsequently, we see things like Mexico, our ally to the south, has joined BRICS. They formally applied. We see in France, Macron strikes a 51-point agreement with China, ranging from 5G to military engagement. We see rumblings that Canada, that Japan, that Australia, that New Zealand are contemplating joining BRICS. We're seeing a situation where Brazil has struck a deal with China to do all trades in yuan on the CIPS system, the cross interbank payment system. We see Kenya come out and say we're only going to buy oil in Kenyan shillings from the United Arab Emirates and from Saudi Arabia. We see the president of Kenya get up on a podium and tell people in his country holding dollars to do what they need to do soon with those dollars, or they will experience losses, as in a few weeks the market will be drastically different. Not sure exactly what that means. We see France once again do a massive liquid natural gas deal in yuan. We are seeing more and more and more de-dollarization, and it is not just centered around these countries that are in the BRICS nations, although certainly we're seeing more and more of them have expressed interest in joining the BRICS, but we're seeing it even with our allies. And I think that when you add all of these things together, the hegemony of the West, the hypocrisy of the West, the sanctions, the G7 countries are sanctioning over 30 countries right now. Just came out that by Reuters that in 2023, the nations of the BRICS are expected to contribute more to world GDP by a little bit than the members of the G7, and it's beginning to transition. And when you see the way that our house is out of order, whether you're talking about what's happening with the elections, what's happening with the debt ceiling, what's happening with our monetary and fiscal policy, with our the way that we're handling the border crisis, just the massive amount of divisiveness in this country and the disunity in this country is only, in my opinion, exacerbating the move away from the dollar. When you see it becoming very evident that, the Fed over the last 11 months has embarked upon what they call quantitative tightening. But after the banks failed in a couple of weeks, 2-3 weeks or less, they put $400 billion back onto their balance sheet. In other words, it erased 2/3 of all the quantitative tightening in 11 months. They did that in just over a couple of weeks. So they have done what all politicians have done throughout all of time, and that is to choose inflation over austerity. They know that if they raise rates high enough, that it's going to break everything. And maybe that's really what they're trying to do. I don't know. But I'll tell you this, if they really wanted to get tough on inflation, they would have raised the federal funds rate to 10% like that, and bang, everything blows apart. You go through the healing process and you're on your way to recovery. They should have done that in 2008, but they didn't. It is the de-dollarization that will ultimately lead to that event. And I think it's just part and parcel with all of the moves that we're seeing that have been accelerated since the weaponizing of the dollar, since us telling Russia that they're out of SWIFT, that you're seeing this trend of global de-dollarization move away. In fact, even Macron said that, it's not just the countries that are pissed off with the U.S. sanctions, it's the corporations. One of the banks in France a year or two ago was fined $4 billion for trading with an Iranian company. And his point was, first of all, he said, us in Europe have no ability to stop the war in the Ukraine. So why should we think we have any ability to stop the war, the impending trouble in Taiwan? We need to distance ourselves from that. So he's already saying, don't call us if you try to get in between China and Taiwan. We're trying to hitch our wagon with China. He says that it's not just the countries, but the corporations are pissed off with the U.S. sanctions. because it's inhibiting them for doing business with countries where if we don't fall in line with what the U.S. says, we get sanctioned. Well, that's the reason that you see such acceleration in de-dollarization. All of these countries are saying, shit, we're next. They're coming after us. If we don't fall in line with what their agenda is, they'll sanction us. They'll freeze our assets. And it's gone past sanctioning. They're now confiscating these assets and using them to rebuild the Ukraine. So, yeah, I think a lot of this goes hand in hand with the dysfunction inside the country and outside, and it's only adding to this exodus from the dollar being considered a safe, stable, reserve status currency, and ultimately I think it will lead to its demise. Biden has nominated a man named Jared Bernstein to be his top economic advisor. And in 2014, Jared Bernstein wrote a report that advocates the United States must actively take steps to remove the US dollar as the global reserve currency. And Biden just nominated this guy to be his top advisor. People are very frightened, and rightfully so. I mean, you look around and it's pretty hard to not be concerned. I think you're not paying attention enough if you're not. Biggest money in the world is front running what's coming, and they are using gold and silver to accommodate, to fill the void for what they are doing to de-dollarize. The mints around the world have kind of gone to capacity, and even still, with only maybe 1% of the public in the United States, probably even less, having anything to do with precious metals, it's becoming harder and harder and harder. Premiums are going up. Ultimately, it will be the defining characteristic of this market. It will be that you just can't find product, because if only 0.75% roughly of the entire public has any investment at all in metals, well, what happens if that becomes 5 or 10%? And like that, it's gone. And it's you have 6 major mints of the world: U.S., Austria, Australia, South Africa, United Kingdom, Canada. When they run out of product, it's game over. And, getting silver eagles is ridiculous. If I sell them at $16.50 over the price of silver, I'm cheaper than anyone in America. That's emblematic of how hard it is to get certain products. Pre-1965 silver used to be called junk silver. It was the easiest thing in the world to get. Now the premiums are $11, $12 over the price of silver. It's ridiculous. There are certain things that we have, like kangaroos right now at $4.85 over. Well, that's double what they should be, but that will be amongst the best price in America. You're finding availability, but premiums are rising, and I think ultimately availability will be a very difficult, challenging thing to offer with any type of regularity and certainty. It's going to be a very fluid market moving forward. Look, all it's going to take is a few more of these banks to fail, and people will really start to freak out. And the mainstream, the big money, who's never even thought about buying metals all these years, will say, my God, get me out and buy me some gold and silver. In fact, right now, there's about 800 banks, according to the Fed, just under, who have unrealized losses of more than 50%, which means if all of their depositors demanded their money back and they had to sell those assets to come up with the deposits or the redemption requests, they're bankrupt like that. That was Silicon Valley Bank. So, normally if you have the time to let these bonds or these mortgage-backed securities mature, then you get your money back plus the 2%. But remember, the banks haven't had any reserve requirements. So if all of a sudden there is a run on the bank and everyone says, gimme my money, the only way they come up with that is to sell assets on the balance sheet, which are marked at par being what they paid for it. This bullshit accounting gimmicks that allow the banks to mark their assets at par, not at market value. So the balance sheet looks really good until you take a closer look and say, well, what if everyone wanted their money back, a la Bernie Madoff? Don't look so good. And that's what a fractionalized system, where you don't have to keep money backing the deposits, really does. And especially when the assets that were bought to offset those deposit liabilities are now worth 40 and 50 cents on the dollar. So when everyone says, give me back my money, I'm out. We're going to talk about why that's happening right now and how the Federal Reserve is actually aiding and abetting this exodus from the banks. They had no choice but to sell those, what are now, in essence, toxic assets, which have lost 50% or more of its value. This is a very, very big deal when you're talking 5,000 regional banks around the country, and already over 700 of them, almost 800, by the Fed's own admissions, are technically insolvent if they had to mark those assets, these unrealized losses, if they had to be marked to market, they're in trouble. And I think we will begin to see more and more of that.